Ladies and gentlemen, Tesla stock is back, soaring higher today by about 4%, actually retaking the important trend line on the technicals. And Tesla is the stock that reacts most to technicals compared to any other stock out there. So I do want to give you an overview of what happened in our markets today, what's happening with Tesla stock, what I expect to happen over the next coming days and weeks. We do have some very big data coming out tomorrow morning that will cause even more volatility for markets. And I want to give you a heads up on my expectations for that. First up, ladies and gentlemen, I think it's very important to acknowledge what's coming next for Tesla over the next 6 to 12 months. Consider everything in the short term just to be noise. We're going to have volatility. There's an election. There's uncertainty about the economy, and earnings are kind of disappointing in regards to that AI revenue boosting sector of company earnings, like Google. Google's, using AI, they're optimizing their business, but they're not creating any products that are really driving revenue for AI. And you are about to experience one of the biggest flips in the history of market psychology. And this is really the thing that I think gives Tesla the alpha here. Not just lets Tesla hit new all-time highs, but potentially as high as $600, $800, $1,000 per share over the next 1 to 2 years. It is this shift from investors focusing all of their attention, their capital into these GPU providers, to change that into focusing on companies that are actually using AI to solve real problems that are going to be rewarded for that over time. As rates start to fall, investors are going to look around and they're going to say, who's actually going to have successful products with AI? And who's doing that today? And the clear and obvious answer and winner to that is Tesla. So I like to reference or use this current analogy to what's going on in our markets and reference the gold rush back in the 1800s, because I think there's actually a lot of similarities to then and now in regards to what's going on. And there usually is references between new technologies emerging and, historical precedents. And I think the gold rush fits this just well. So if you think about the gold rush, everyone moved out west, right? They went prospecting for gold. The companies that initially did well were the companies that sold the pickaxes, the sifters, shovels, things of that nature. That was the invested area at the time, at least initially during the gold rush. But once that faded, who actually made the most money? It wasn't the pickaxe and shovel companies. It was the individuals and the companies that bought the land that contain the gold for dirt cheap. Those were the companies that actually benefited. I'm looking at this market and I'm looking at the early round of AI investment as the pickaxes and the shovels, NVIDIA and SMCI and Intel and AMD and Broadcom and all these stocks that are Wall Street darlings today. They're really the pickaxe and shovels. They are the enablers of AI, just like pickaxes and shovels were the enablers of the gold rush. But the actual value is extracted out of the property. It's actually extracted out of the use cases for AI in terms of today's, revolution. And I think Tesla is the biggest, best piece of land within a larger gold rush. And eventually, from this same analogy, the value, what then happened at the time was the value of the land that had the best and purest gold did the best. And I think Tesla is that piece of land. And I think it's going to be simply a shift of psychology over the next 6 to 12 months from, hey, maybe we don't want to be super exposed or all in on necessarily just NVIDIA and the enablers of AI. Maybe there's some value in the application of AI. That could be a Tesla. That could be Elastic NV. That could be IONQ. That could be many of other companies. Datadog, potentially you could group in that category as well. Maybe even a SoundHound to a lesser, extent. based on use cases just being smaller for something like a SoundHound. But I think the attention will shift from these GPU providers to these companies like Tesla that are actually doing something with AI. And I just bring this up because I don't want anyone to lose sight of the next 6 to 12 months. I don't think this is a 5 to 10 year kind of concept. I don't even think it's a 2-year concept. I think within the next 6 to 12 months, you will start to see the dollars flowing into areas like Tesla. Again, it's the psychology of investors that is really going to change. And the news we got today validates some of the rally that we are seeing in Tesla in terms of the economy. We got the data today for quarter-over-quarter GDP. It came in at 2.8%. Yes, a lot of that was due to inventories, government spending, and other things we can draw conclusions to that maybe are temporary in nature. Wall Street doesn't care about that. They just care about the overall number. Now, if you exclude government and inventories and things that could just be one-off kind of, this quarter or last quarter, one-offs, GDP was still 0.6%. So not great, but not necessarily recessionary. So either way, from that standpoint, I think what we got today with GDP data was a big win for the bulls because, beyond just a political correction or earnings being too optimistic and slightly getting disappointed that could give us a correction, I think that's ultimately still what we are in. At the very least, a period of intense volatility will be coming over the next couple of months. These GDP numbers are a strong, building block to the bull thesis, to the soft landing thesis, which is ultimately the most important thing. And you've seen this represented in IWM today. IWM surged over 2%. This is not a recession fear kind of environment. This is not a growth scare environment. This is a risk on environment, looking forward to the Fed starting to reduce rates. So minus any political uncertainty, minus any small disappointments on earnings, probably small disappointments on earnings, I think this is still a raging bull market until the economic data says otherwise. And what we just got says, hey, the last 3 months were good. The next 3 months are probably going to be okay at the bare minimum. And I just think this is a hard environment to get too bearish. Short-term trading day by day, of course, there's an area for puts and to be negative on certain days. But the thesis got more intact for the bulls today. Thus, the bull thesis got more intact for Tesla as well, because I have stated over and over again, the economy is the number one driving factor of Tesla stock. The first sign of a recession or some kind of larger slowdown, you're going to see Tesla stock get hit hard on that. Vice versa. If the Fed is cutting into a decent economy or a strong economy at that, the GDP numbers would suggest a strong economy today. Again, you can nitpick the numbers, but from Wall Street's perspective, this is a strong economy. That is fuel for Tesla stock to go higher. Now, with that said, we do have some data coming out tomorrow morning. We have core PCE price index month over month. This is what the Fed watches closely. And last month, we had 0.1% for your PCE numbers. We were sitting at like 0.3% for February, March, and April. This is kind of what caused the Fed to become a little bit more, hawkish, conservative potentially in their rate cutting path. But last month, you came in at 0.1%. You're expecting another 0.1%. It's possible you could actually be negative. You could actually be slightly in deflation territory, which could send the Russell soaring even more, which would send Tesla soaring even higher. Now, I will say the expectations are low, so there's a chance you come in at a high 0.1. So there's a chance you come in at 0.15, 0.15%. That's still not a bad number, but it would be revised up to 0.2%. So I think you would really want to watch the decimal, because, 0.14, 0.14% is going to come in as 0.1. 0.15 is going to come in as 0.2. Those are those are big differences on your month over month headline number, when in all actuality, it was a very, very minor difference that caused the overall number to look different. Hopefully that makes some sense. If you know how to round, if you know how rounding works, that makes a lot of sense. These numbers are ultimately rounded. Okay, so you could come in at 0.06 like we did with CPI last month, and it's still going to get rounded up to 0.1, even though that's a really good number. So I think the decimal is obviously going to be very important, but I am optimistic heading into tomorrow that we're at least going to meet expectations, if not come in a little bit lower than expectations. And given the last couple of days of selling you've seen in the S&P 500, potentially that could lead to a little bit more of a bounce. Now, I still think there's going to be political uncertainty throughout August. August tends to be one of the worst, or I guess not as bullish periods of the year, especially during an election. And then September tends to be, one of the worst months. So you're definitely heading into some seasonal weakness here. But I mean, if PCE comes in good tomorrow, I think that does lead to a little bit more of a bounce. Now, with that said, if we really do go into a larger correction, this could be that opportunity to potentially load up on some more puts or some more downside protection, or simply just raise more cash. Now, tomorrow morning, we will get personal income month over month. You're expecting 0.4%, and personal spending month over month expecting 0.3%. I don't think these numbers are going to matter in regards to the PCE number. That's really what is going to dominate the headline. Now, it would not surprise me if we also get a larger rotation with a lower than expected PCE report. For an example, when the CPI report came out, way better than expected. That was a sixth Sigma event that happens on average every like 500 million days or so, which is just unprecedented. The last CPI report we got, nobody was even close on Wall Street. They were all wrong. IWM soared and has held a vast majority of the gains, and the mega caps sold off. It wouldn't surprise me if we see more of that, which could actually negatively impact the S&P, which could cause the Russell to continue to soar higher. And really, a lower than expected PCE report would validate this rotation that we have seen so far. It would validate the Fed cutting rates in September, and would be very risk on for markets, generally speaking. But considering these mega cap names have been seen as a defensive or safety trade to some degree over the last 18 months, that would likely mean some selling in your mega cap tech. And Tesla today, on a technical basis, yes, was up almost 4%. You're holding this downtrending line for the technicals. That is the biggest positive thing you could see on the technicals right now, because yes, we just had our worst day in like years for Tesla, down over 12%. That was obviously not great, but nothing changed with the overall thesis. Just short-term momentum got pushed down the line a little bit to October instead of August for the robotaxi event, which, maybe that's a bad time to hold the event because of the historical precedence of markets selling off after election or before elections. Markets usually rally after elections, but nonetheless, you're holding this trend line. Nothing changed. There's actually more of Wall Street that is interested now in owning Tesla. I have a feeling that a lot of retail investors are still going to get shaken out of their Tesla positions, when now is actually likely a good time to add to those positions. I still think Tesla can hit all-time highs by the end of this year, as long as we are avoiding a recession, the soft landing narrative stays intact, the Fed starts to cut rates. I don't really see a huge bear thesis for Tesla throughout the rest of this year, as long as the economy continues to do well. And there's still a fair amount of money managers and analysts that are pretty bearish on Tesla. You could see here from Tony Saganagi, Tesla's car business is, quote, struggling. Isn't that some genius words to use, as Tesla is outperforming every other EV company out there. But what you're actually seeing out there is very positive under the surface from institutions. Take a look at Tesla's short interest of free float, something I mentioned in the last video, sitting at 3.77%. Yesterday, it was at 3.79%. So you actually have seen about 1 million shares on net get covered in the last 24 to 48 hours. Think about it like this, simplest way I can put it. If you were bearish on a company and that company just dropped 10% in a day, you probably wouldn't look to cover on your short position, especially after the 70+% rally, the big gains that Tesla's already holding. You're probably going to say, now might be a good time to double down in that short position. Maybe Tesla stock continues to fall and this downside momentum continues. But if you're someone that's like, oh crap, maybe I shouldn't have taken that short position. Maybe Tesla stock can do well here. Maybe there's a reason to be bullish. Economy's strong, heading into some rate cuts. Maybe I want to cover on that short position. That's actually positive, right? Even though Tesla is down 10% yesterday, you've seen shorts start to cover at least a little bit. That's what should happen to quality companies that are doing well, that Wall Street feels bullish on. We've seen that in broader markets, IWM, QQQ, SPY, all of your big tech names. It's not like people hate these companies. They think they're going substantially lower. No, the short position was high. They're starting to cover as the stocks have went lower. That's what happens if you're not necessarily uber bearish on a company. You cover as the stock falls. Now, people, when they're super bearish, they just short more and more and more as the stock falls. That's not the camp that Tesla is in these days. Now, take a look at yesterday from hedge funds and institutions. Keep in mind, Tesla stock was down 12%. You had 46 different unusual and interesting trades, totaling $14.3 million with a positive order value of 72%. So you're telling me on a day that Tesla fell 12%, you actually had 72% of institutional option activity that was positive? I don't know if there's a better sign of how big money actually feels about Tesla than that. Today, you have seen 11 different trades totaling $2.68 million with a positive order value of 84%. Now, I would expect it to be a little bit better today as Tesla is up today compared to yesterday. But I mean, when you look at the last 2 days, what does this tell you? This tells you Wall Street's growing more bullish for Tesla or on Tesla, not the opposite. CNN's Fear and Greed Index today is neutral at 45. Yesterday, you were in fear territory at 41. So it's a little bit better today, again, because of that rotation into the Russell that you're seeing. And today's actually very much risk on day. You have more stocks up than down today, which is, I would say, always a great sign when you're seeing the markets actually start to participate. I mean, take a look at this. The percent of stocks currently above their 50-day moving average is up 6% today. So 6% of all stocks are trading now above their 50-day moving average today when they were not yesterday. That means a large chunk of this market is actually now in an uptrend. And I do think PCE tomorrow is probably going to validate just that. We went from panic sell to panic buy in the matter of just a couple of hours. The Russell went up like 2% in 2 hours. It was absolutely insane. Now, normally when you see momentum like that, that's usually not something you want to fight. Now, again, I see a logical argument for tomorrow's PCE report coming in lower than expected and causing some selling in big tech, which could be negative for the S&P, but probably pretty good for the equal weight S&P and the Russell 2000. And also really good for Tesla stock because, I mean, what's there not to like with a decent economy and rates that are expected to get cut over 3 times this year? If we take a look at the Fed rate monitor tool, there's a 6.2% chance of a July 31st rate cut. There's almost no logical chance the Fed's going to come out next week and cut rates. They're in a Fed blackout period. That would really be seen as like an emergency rate cut, and that's not what the Fed wants. The Fed doesn't want to crash our markets, and that would certainly crash our market. So that 6% probability, it should be 0. There's no chance of any move from the Fed coming next week within reason. Now, for September 18th, there's an 88.2% chance of 1 cut. There's 11.5% chance of 2 cuts by September. That could be a cut next week, a cut in September. That could be a 50 basis point cut September 18th. But there is a 0% chance that the Fed does nothing by September. So the markets are saying September is the day we're going to get some cuts. By November, there's 56% odds of at least 2 cuts, likely September a cut and then November a cut, and only 37% chance of only 1 cut by November. And then by December, you're firmly pricing in 3 cuts at 54.7% odds and 2 cuts only at 37.5% odds. So again, with the GDP coming in stronger than expected this morning, with the markets pricing in a looser Fed policy with a strong economy, that is a recipe for a rally in Tesla, especially as big money starts to realize, hey, we want to be allocated into AI, companies that are actually applying AI, not just the companies that are building the infrastructure necessary for AI. And again, I think we're about to witness one of the greatest shifts in market psychology on a dollar amount basis than we have ever seen before. Now, do I think Nvidia is going to crash? No. Do I think SMCI or Intel or AMD is going to crash? No. I just think they're probably going to stagnate, if anything. Maybe go down a little bit. You've already seen them kind of go down a little bit. But the capital will start to deploy into these software stocks, into stocks like Tesla. If Cruise, for an example, were a standalone company and listed on our markets, I think Cruise would, be benefiting a lot from this wave of capital investment that I think is coming. And I think this could really happen at any time. Now, I say 6 to 12 months to be a little bit more conservative. I think there's going to be some political uncertainty and some volatility around this earnings season, generally speaking. But, I mean, any time now, you could start the greatest shift of psychology and capital on a dollar basis you have ever seen. And this is precisely what I expect will send Tesla to new all-time highs. Perhaps we need to get the robotaxi event out the way first. That's kind of been my long-standing, I guess not long-standing, but over the past couple of weeks, that's what I've been saying. I've been expecting new all-time highs 30 to 60 days after the robotaxi event. But, I mean, if the economy is going to stay this strong, then maybe we don't even need that event necessarily. Perhaps we just need inflation to really show some more improvement, which I think is what we're going to get tomorrow, and some optimism heading into the robotaxi event in October. But obviously, this is speculation on my part. By the end of this year, I'm expecting new all-time highs for Tesla. And I think this is an opportunity that a lot of retail is going to miss out on. I think a lot of retail is under the assumption, let me know down below in the comment section where you are on this, but Tesla stock's probably going back to 200 or 180, 160, 140. And that's possible, but I don't think that happens without economic weakness. And we just basically got a green light for maybe the next 3 months until the next GDP report, or maybe the next revision, perhaps, that the economy is doing okay. It's doing well enough. So let me know what you think about all of this information down below in the comment section. Do you think Tesla stock is going higher? Is it going lower? Let me know your thoughts on this down below. Hit the like button as well as subscribe to the channel if you have not done so already. If you guys also want to come join the trading community, check out that link down below in the description of this video. You guys have a fantastic rest of your day, and I will see you in the next one.